Good morning and welcome back to Almus Market Mornings. We have got lots to cover today, of course, starting with President Trump's recent post, which put a 25% tariff on India, along with further penalties for purchasing Russian oil. This has taken up the limelight for us, and there are several things which aren't clear yet, since trade negotiations are still ongoing. There was also the Fed meeting. Rates were kept unchanged, but there were two dissents. Governor Waller and Government Bowman were advocating for a 25 basis point cut. This was the first double dissent in 30 years. Good morning, JK. Quite concerning tariff news for us. We have seen sharp rupee weakness yesterday. Do you think rupee is headed to the all-time lows?
Good morning, Swaraj. Yes, I think the 25% tariff was at the higher end of market's expectation. Uh, so it's not, at least in the short term, it is going to be negative until we have clarity on how the negotiations go forward with the US in the coming months. The government of India has taken this, noted this in their statement and said that they will work towards a comprehensive trade deal with the US in the coming months. In the process, they have also taken care of the interests of the economy and not relenting on some of the US demands. Yes, there is also a concern about the penalties on Russian oil import, but that was also in the air for quite some time, and so not a big surprise. But the latest statement from Trump also says that they are talking to India and they will see what happens, and we will know at the end of this week on India tariffs. So there is some scope for maybe some moderation, or we don't know. Knowing Trump, it can be on the other way as well. So the uncertainty continues for India. And for rupee, it has been quite a few negative factors driving it lower. Possibly, few would have expected, and I definitely did not expect such a sudden steep fall in the last three sessions. And yesterday's session, including the offshore market, it fell 1%. 1.65% this week, and a whopping 3.1% in the month of July alone. And in the last 10 days, it has seen everyday weakness. So even discounting 25% tariff that Trump has announced for India from August, this is definitely a massive move. So it becomes stark when it considers that the rupee has already been underperforming for the last several months, even as dollar index fell 12% and rupee was weaker by 0.5%. Yeah, as I said, the tariffs have come as India did not compromise on the interests of the economy. So we'll have to wait and see how these things go forward. But however, in the short term, rupee looks oversold against the USD, and some recovery is likely. In fact, you could see that in offshore market yesterday, rupee was not weakening further, even as dollar index rallied after Fed meeting. Once again, to repeat that rupee is already fairly valued as per RER, and a further fall would not only make it undervalued, but will also lead to higher imported inflation. So any sharp gains are not likely immediately, at least, and possibly central bank action will be seen if there is a tendency for the market to, weaken the rupee further beyond 82. So, to answer your question, new low likely, but not immediately. It could wait for some consolidation. And of course, all the focus yesterday was on the Fed, and the least unexpected event was Fed holding rates at 4.5%. And this meeting was unique in the sense that there were dissents by two members, and this happened last in 1993. And the last single governor dissent also occurred in September 2021. That time also Bowman was the one who actually dissented. Now, there were some changes in the Fed statements, and they indicated that they removed the words that the economy has continued to expand at a solid pace and moderated in the first half of the year. So that has been removed, and that was something that the market noted. But the Powell statement also indicated that inflation remains somewhat elevated and the economy remains strong. So he doesn't think that economy is weakening much. In fact, he even referring to the employment situation, he said the single most important indicator to look at is the unemployment rate, which is now at 4.1%. It is also low by historical standards. Therefore, Powell's outlook for inflation remains quite uncertain. Although he thinks the tariffs will be a one-time price increase, Fed is trying to get it right for a move on the monetary policy, and they want to be sure. And he also stated what we had also like indicated yesterday that these tariff increases, some of it could be absorbed by consumers, and some of it can be actually absorbed by the retailers as well. So there will not be full pass on of the tariffs. So that is the positive part. However, for a specific question on September rate cut, he was very much non-committal. And that actually led to, the dollar rising as well as stocks falling. Now the September rate cut probability is closer to 40%, and it was above 60% a few days back. I think that this is the background in which the dollar has risen, and the market continues to correct the oversold dollar position. Even as the economic data yesterday, at least the headlines have been giving a good picture of the US economy. GDP for Q2 first reading showed 3% growth versus estimate of 2.4%. But there are some underlying factors which is masking the real picture, because the Quarter 1 and Quarter 2 both have been affected by distorted numbers on imports and exports. So in the first quarter, high imports, which was led by front loading ahead of the tariffs, led to lower GDP, and the reverse was the case in Q2. So I think these two numbers have to be taken in that light. But the preferred measure of domestic demand, the final sales to private domestic purchases, actually rose at 1.2%, which is the lowest since 2022, and that is what the economists are looking at. Even if you look at the ADP number, which came positive 1,04,000 versus 23,000 decline in June, expectations being 75,000, it might look at a good beat, but if you average this, see June July number, average is coming to around 40,000, and that is well below the last 3 years average of 1,30,000. So the headline numbers are somewhat misleading, and both on the GDP and the employment, they are not looking very strong. The JOLTS data actually had confirmed on Tuesday that you have a job opening which is well below the average of the last 3 years, which was at 9 million, and now currently we are having around 7.5 million. I think the numbers have to be seen somewhat with the skepticism, although market did react positively to these numbers. In fact, yesterday we also had the numbers from Germany, which showed the economy again slipped into contraction in Quarter 2. The initial, the Quarter 1 rise had been again helped by front loading of exports to the US ahead of the tariffs. So again, these GDP numbers, these last 2 quarters have been somewhat distorted, and we should be not looking too much into those numbers. On the other development, Bank of Canada held its rate steady, but there is a possibility that going forward they'll be cutting again, despite the CPI's recent rise and employment growth also coming strong, because the policymakers have been looking at growth outlook, which is now at minus 1.5% for Q2, and they still haven't finalized their tariff or trade deal with the US, which is now still standing at 30%. So, and of course, we have BOJ in a short while. Some investors are hoping that the trade deal between Japan and US can pave the way for central banks to raise the rates. But if they do, that will be a big surprise and can be a market mover. Yes, now from here on, we have PCE core inflation today, further inputs on tariff-induced inflation, if at all, and then, of course, the all-important non-farm payroll report tomorrow, which the market will be closely looking at, because that is one number which is gives comprehensive picture of the employment, unemployment rate, and will be a guide for the policy as far as the Fed is concerned. Unemployment rate is expected to come in slightly higher at 4.2%. Non-farm payrolls to rise at 110,000 versus 147,000 tomorrow. We'll see how these numbers eventually pan out. So there's going to be a lot of volatility both in the global market and in the Indian markets as well. In view of the various news flow. And don't forget that today is the last day before the deadline for reciprocal tariffs end. And there could be a lot of deals coming through, or there can be fresh announcement on the tariff rates as well. So look forward to a lot of volatility in the coming two sessions.
Thank you, Jackie. And I think domestically, we are all quite looking forward to what kind of trade deal gets finalized as of now. Yesterday's statements from Trump and the tweet that was released of 25% tariff plus the penalties that can come across, even though it is not clear, but it seems for the domestic sentiment, it seems a little bit of negative. We have seen that reflect in the rupee's moves, which has weakened by over 3% in July, it's a big move for the rupee, which was already underperforming the dollar and did not participate much in the dollar's depreciation. When it comes to the other events, Fed meeting, it was very well discounted that Fed will hold rates. We had a double dissent, as we discussed, last happened in 1993. And interestingly, Fed statement removed the wordings regarding the expansion of economy at a solid pace. Even Powell's statement indicated, but Powell's statement indicated economy remains strong, but he remained non-committal for a September rate cut. So September rate cut expectations has moderated after yesterday's event. Now we have got the Bank of Japan meeting up ahead, and it is expected that there won't be any changes in rates. If there is, then it will be a big market mover. We'll keep tracking that. It will come out in a few hours. That's it from us today. Thanks for listening. We'll catch up tomorrow with a fresh round of updates.